This conference will now be recorded.
Good morning. It's 9:06. This is a second take. We had an audio issue. My apologies. It's Friday, 29th of January, 2021, last day of the month. Tough couple of days. We had a reset or retracement, and one of it was very brutal on Wednesday. Thursday was not easy either, but these markets are never easy. If you think this was easy, you could just, if you think this is easy, try it. Try trading it with Robinhood. Yeah. So it humbles all of us. I got nicked yesterday on one account, but Wednesday was different. Wednesday was brutal. So, but you can't keep taking money out of the market. At some point, the system says, hey, bring some back here. Yeah, it got to stabilize itself, right? That's what exactly I remember the poor hedge guys, right? Or at least they're poorer now. Okay, let's move on to econ data. There's no housekeeping items here. Just quickly, econ data. As we discussed in the first take also, consumer sentiment is what I'm looking at for today. That's at 10 o'clock. And GDP was yesterday, right? 79.2 seems to be the consensus. Prior was the same. 76 to 85 is the range. At 10 o'clock, we also have pending home sales. I think this should be red. I don't think why this is green. Should be looking at that also. The other one that was important to me is personal income, and it actually this is November. We're looking at December data, right? This is November, so there was a little bit better. Then also the expenditures were less. Probably maybe because some of the help we did government-wise, and I don't know why, but I'm just guessing. But this one, look at this, the expenditures actually dropped. A little people are more cautious, and they have to be. Wasn't a big Christmas as it used to be. I used to look at this a long time ago in detail because when I was bond trading, I think Brent Bernanke also brought it up, so it's something he looks at, but I haven't looked at it recently, so I'm rusty. Forgive me. The following week we have ADP non-farm. We have trade deficit. Those are three things that are coming up next week. Wednesday, Friday, and it looks like that should be either on Friday or would be the following Monday for trade deficit. We're further out for other stuff like housing starts and OEX. I'm trying to build a better economic calendar, better than Econ Day, so we have a little bit forward view of things. Okay, let's go through the charts quickly. We close at -2 sigma, -1 sigma on Wednesday, and yesterday it was a big reversal, but gave it back last hour, last 40 minutes or so, or maybe more than that. Yeah, probably last hour. And we came back up to, we dropped down to 0.6. Notice NDX is still holding up. Apple beat was a nice, comfortable earnings. I remember it. I think the stock is a little bit down, but they're always, these folks are looking for perfection, and there's nothing perfect these days. Yeah. Get over it. Exactly. We bounced from a McDonald's very low at -1, I think -200, what it was? Yeah, 235. Remember, you have to wait for after end of the day for this to refresh to be reliable. We were a little bit lower, with 280 something throughout the day, but that's because the plants are giving data, not the exchange. You need to get the exchange data certified. Once that got certified right at the close, a couple of minutes after the close, that data cleaned up. Remember, this is a huge task. All the numbers coming in and out throughout the day, and the plants are doing it. That was like TradeStation, TD, and so forth. I heard TD froze at one point. I don't know. I haven't touched that system in a while. Even, pretty much even on the volume on the NYSE side, 2-1 on to the upside. Remember, this is down to up volume for NASDAQ. So NASDAQ was strong. DTs could not get through past 200 day. I would say 50 day, way above 200 days. So this is the first indicator here that there's a TD that's negative. DT, I'm sorry, DT. First D, yeah, keep on saying TD. First D trended that's negative of the 8, and we dropped here. That's the transposition. This is not good forward looking, and we should watch for this level. This level right down here, this gap there, this level here. The 12,165, that area, we should look for that. If we take that out, that means the forward column is not good. It's not as rosy as we think or we would like to think. Markets in aggregates are not wrong. Individually, we could have opinions, but not in aggregates. And especially after several sessions. So you see a shape there, you see a acceptance there. So this is a forward discounted value of the economy, and the last week or so hasn't been too good. All right, now NASDAQ still pumping up strong. So is Russell. Russell has recently as a proxy. I can't say that always. Recently as a proxy, the small caps are in favor, and there was an insight day yesterday. We're still positive on the trend there, about 7% above the 50-day, which is 197. Shape is good as long as it can hold it. We have a little bit of stretch here, but we have been. We were even worse than that. Look at here. We were at 38% over 200 days. That's huge. Anything that over goes up has to come down a little bit. All right. SP1 Momo. Momo came back. As you know, Momo had dropped quite a bit. It's 913 right now. Let's try to wrap this up quickly. We're at negative 1 sigma on SP1. As you know, this is a modified advanced decline for S&P 500 only. These numbers mean nothing. Ignore the numbers. What matters is the shape of the chart versus the shape of S&P. And within that, taking a look at what the vibrations that Sigma channels are showing us. Okay. Remember, as we get close to here, see how it pulled back. Market went up, but this thing pulled back and eventually dropped. So that was a foreshadowing the good news we were getting, that market reaction, but the internals were unwinding. Are you with me? Okay. And this is a smaller brethren. You can see this also got into trouble. So see, I'm trying to catch a low here on the with time and digest. Somebody asked me, they're not publishing it. What are you guys doing? Listen, they are publishing it. Well, they're not publishing it, but they're tracking it still. They still want to know our signals. So I'm going to follow my protocol. No need to change. They're trying to figure out what to do with their data. This is a valuable part of their system, the company. So they want to get that publication back up. But the issue is what cost and how, what's the best resource. So we're not going to give them a gap in our data. This is our signals. You will get, their emails are working. We're going to send it to them. We're going to send it to you. Okay. So I'm trying to catch up. Now, of course, I boo-booed here big time. That's why we went back here the second time. We'll see what the day we're going to have. I'll close today's crucial for the Friday. Did somebody went down yesterday? The news is still not out. That's what we want to see, and then close this chapter. There should be buying coming in for the end of a month and beginning of the month for next month now. The issue is window dressing. Remember, that's not going to be like used to be. And you are unemployed. Yeah. As Neil Young says about that was a song with the needle, it says that damage is done. Yeah, exactly. Neil Young. All right. As we warned you, intraday on this is today, by the way. This is, remember, VIX trades early in the morning. Yeah, down. So if you look at it, this is today. We pulled back, not as much as actually we're above yesterday range. We're in the middle of the rest of the range right now. But we pulled back yesterday tremendously. 2 inside days, we hit 4 sigma. If we recognize that pattern from the past, basically this says that this wave, this shock wave, I'm saying I need more coffee. this shock wave is basically beginning to unwind. It wasn't as bad as you think, if you look at it from a historical standpoint. We're not going to be repeating this for a long time, please. So that shouldn't be your scale. This was, you can see where we're at 85. This is 16th. This is 18th. We said 20th. Look at what happened by 20th. It already pulled back. And 23rd was the low. That was a physical low. So the shock wave had already receded. Thank you, VIX. Thank you, Sigma Channels. To give us a perspective of what we want. Well, you're not going to see that. Not in magnitude. If we do, we're in big trouble. I mean, big trouble. And you can't say no. Never say never in the market. But you would need something like 2 or 3 new variants come out, let's say on COVID, compared to that was COVID. And none of these vaccines work. And that would say that we're going to be, thanks, Nancy, that it will be a year before we have a working vaccine. Like what we have now, we'll only keep track of that. Take care of your basic stuff, basic COVID. That could be. Other than that, I don't see it. So, I mean, I keep very close tab with my biotech guys, and I read. And actually, I met a new person here in California, Florida. She's a friend. She's a girlfriend of one of my friends. She's very smart in this area, and she's giving me some stuff to read. And she actually does a lot of presentations on this subject for her companies, higher ups. So she does a lot of research. And she's a bookworm. So I'm getting some stuff to read. I forget what company she works with. I don't think I should say this, but one of the big pharmas. Okay, they did correct SKEW. As you know, we have the 79th, which would have been down here somewhere. No way. The design limit is 100 to 150. Yes, we have broken over 150 once, but this was almost 2.5 years ago. Yeah, end of August of 2018. Not going to be repeated. We have not been able to break over 150 yet. Not that they tweaked anything, but that was an anomaly. We've never been below 111, even though the design limit is 100, 150. Remember, this is a synthetic number. Look at the tail risk on the downside. Remember, we have 2 tail risks, right? Each bell curve has got 2 tails. This is the tail risk to the downside of SPX put options. So obviously, the tail risk on the upper side would be the call options. As observed by looking at the SPX trades, which is the grounds, the domain of the big boys. You know, average mom and pop won't touch SPX. No, and definitely not in any size. Definitely not in any size. They're too expensive. So that has receded, maybe because we were pulled back a bit. But you could see what we were here before. You know, we were hitting not just the level, but also sigma. We had hit 4 sigma there, 3 sigma there. Didn't go past 3, no. May have a slightly intraday, but remember, also, SKU sometimes is undeterminable because you have to solve for it. That's where you get some of these jagged straight lines. If you look at the data, it's not, it is, they try to measure it daily, but sometimes there isn't. So what TradeStation does, it connects a straight line from the last known value. So you get a little bit of straight lines there across, let's say 2 or 3 days. Of course, this case is not a good example. This was a slight changes there. But you could see what I'm talking about. Some areas like this, like this. That means in between there was no defined value. It came down like that. So, but the shape doesn't change. That's the last observable. You know, that's where we are. And there was a peak there, and we pulled back a tad. We'll see. I don't think. I mean, if this thing drops down, goes below 125, we're back to normal again. Back to normal environment. We were here in October. Yeah, it was 117. Right before we went to last tail end of election cycle, and you could see right by election time, right by November 1st, how nasty it was. It went up. It's just signaling we're gonna have an issue. This signal up here, both from the sigma channel and value, tells me that potentially we're looking at a low 8 to 10 weeks forward. So if we do not pull up here, I have no business here being long. Gotta get short, yeah. Okay. Trade, not my favorite, but it's been on the sell side here, came back from the sell there. This is overall trade. So this is all, you have to take all the numbers in. So I'm taking all of the market, ComQ and DGI. Actually, this should be NYA, but they don't broadcast NYA anymore. I don't know. Let's see, let me try it. NYA, that's not here in composite. Yes, it's not coming out. There has to be out there. Maybe they changed symbols. I'll do that later. We'll experiment here with your time. All right, what time is it? 9:22. Let's hustle. Okay. Great signal here. Okay. Yeah, this was a +4. This is a 3 months spread. Again, long Feb. That's the lead month. You can see from the volume. Okay. Long Feb, short May, 3 months forward. Okay. That creates this chart, the cyan line, and then we do a signal channel on top of it to plot it. But it's a spread, so your standard signal channel is not going to work. We have to modify to grab this. It's you're plotting in a way. Think of it this way: you're plotting an indicator because the spread is technically the indicator. So you have to create a spread and then do a signal channels on the spread itself. Okay? But you could see its timing right before the low. It peaked, went to 3 sigma, pulled back down, and then there was a double test overnight. Thursday morning, huge rally and give back completely back this big. I got caught in here a little bit. Now we're riding up a tad. We have negative 14 yet. We're still negative for the day. That's right. Coming in overnight. More importantly than that, the TD, I'm saying SP2. SP2 is saying, hey, I made my low. I'm going to pull back up here. This is as of yesterday, 42. We should be about 50, 55 here today. Rendezvous points with the stock RSI. By the way, you can plot that. It comes over parts of it's not my indicator. I quoted it. Nobody had quoted it before. This is Tushar Chanday's the best momentum indicator he had, which gave me a lot of ideas how to do the CI. Great book to read. This one, we failed to do the rendezvous point. So it's a little bit on the weaker side and has already pulled back. Okay. If you look at the divergence there. So I'll pull that. Most likely, we're going to get washed here a little bit more, and that's it. Most likely. Okay. If we go down to sit here, or that is, the green line doesn't bounce fast, then we have more sales coming. The green line is more sensitive. These are 3 different time frames. I don't know what they are, but I have to show you. Again, did you see that? Yeah. So you could see the spreads. 1427, 1450, 14, and 1454. That's what brings it up. So you have different 3 time frame coming in and try and get what we call rendezvous points, where they get all lined up here together, or get all lined up here. Not perfectly, should be a little bit higher, but markets are never perfect. Looking at perfect situation, try Uber. We're above 1% again on 10-year. Okay. There's a pressure on the short term to the downside on the yield, and long term is rising. This is good. I don't have no problem with that type of structure of interest rates. The yield, what you call it, yield curve. Yeah, I don't have any problem with that. If you got 0.5, 4, 9, and 18. Just visualize that. I'm saying 11 and 18. Yeah, 0.5, 4, 11, and 18. So I just remember, you got divided by 10. That's the actual rate. Okay. These 3 are yield to maturities. That's a discount. You have to compound that 4 times because that's a 91 day. All right. Did we get into a little trouble? Yeah. Did we stop that? No. Watch out. Yeah. Watch out where we're going to be. Remember, I bought further out in the February, for the PMT. Okay. Okay. Overnight. Let's look at what we did overnight. What time is it? 9:26. Couple of minutes here only, as we need to hustle. Long term. Oh, okay. You see where we are now. This is the Excel Plus. This is the granddaddy of them all. This is the big boys trading the big contract, trading the, it's not ND, it's NQ. I understand that. But that's where the volume is. We can't do much with ND maybe, but we get lost. We don't have a good blend, because it's 5 times as much contract. So the number of block trades dropped dramatically. Here's a good compromise of the NQ with liquidity and a lot of blocks, and this is where we are. So, all right. This is a 30 minutes. You can see signal over where we are. It's trying to slowly edge up. You see the slope. You see the CI. So it's trying to recover slowly, but we're starting in a hole, so it's going to take a little bit of time. Chevron really missed badly. Yeah. This is what I post for you guys. Boring finally, this is what we're going to talk about. Levels, okay, and then this is day session only, but these two are going to be our Sigma and DMZ. Crucial. See how this thing moves? Yeah. Now watch out with again. Watch out with crossing back and forth in colors. Okay, obviously it's indeterminate. It's not sure. It can go either way, and then it continues. All right. Good luck today. Be careful. Keep your bet size small. Remember, it's Friday. Any questions for me? Any questions? None? All right, guys. Thank you. Good luck. We'll see you in the NQ Skype chat.